Hello, everybody. Welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thank you for joining us. So today we're going to talk about interest rates, both long-term and short-term, the Federal Reserve's interest rate decision. Josh is going to talk about that, earnings, and then we also have midterm elections here coming up this fall that could potentially be market moving. Sunday night, we just crossed 40 trillion in national debt for the first time ever. Which isn't a good thing. I don't know why I'm smiling when I say that, but and nobody seems to think it's a problem, at least in Washington, D.C. And that's not a red or a blue thing. That seems to be every politician doesn't seem to care about it. They talk a lot about it, but nobody ever does anything. And so I guess one of the consequences of that means higher long-term interest rates. I can't think of anybody that I know, Josh, and I certainly wouldn't lend the U.S. government money for 30 years right now without a higher interest rate. And so that is going to alone keep rates higher. Remember, companies are issuing more debt than they have in a long, long time. And the U.S. government has an seemingly insatiable need for endless amounts of debt. And so all of that means there's going to be a lot of need for borrowing. And that means interest rates on the long end, which is the part of the yield curve that matters, the 10 and 30 year, that means yields are going to be higher across the board there. And so what does that mean? Well, the higher yields get, the higher cost of capital is for businesses. Remember, for 15, 18, almost 20 years now, the cost of capital for businesses was close to zero. And that meant they didn't have to make such economical decisions with their money. But as yields go higher, it means that the people that are making decisions at corporations, they're going to have to make much more economical decisions. And so that could mean slower growth for this U.S. economy. But just higher yields in general can be a headwind for stocks. When you get maybe a 10-year at 5%, that gets attractive for some investors relative to the stock market. And so that also could be a headwind for stocks. So we think the longer term story for the stock market will be these higher yields at the longer end of the yield curve. And historically, that's been the case when stocks have rolled over. A lot of the times it's been because of the higher interest rate environment. And we think that's a higher for longer scenario.
Yeah, also just a quick recap of earnings season. It's wrapping up here. Only a few companies left to report. Earnings growth is almost nonsensical, north of 50%. A lot of that's actually driven by one-time recognition of gains in stock portfolios. I mean, Google itself got a couple $100 billion windfall just from the SpaceX IPO. You strip that all out, you're still north of 30% earnings growth. What that translates to from a valuation perspective is stocks are now kind of trading at the same averages that they have really for the last 5 years, despite what we would characterize as pretty astonishing growth in the overall level of the index. So that's all good news. Remember, central bankers are at their annual high-class rendezvous in Jackson Hole this August, so we won't get any meaningful policy decision until the middle of September. Market expectations have really shifted and are now kind of, no one anticipates a rate cut or a rate increase, at this point in September. The long end of the curve, as Tyler mentioned, kind of doing the work for them, precisely what you would argue that the president would want, at least on the short end. But again, we're not going to have any policy clarity really. And, the jobs report that was fairly weak here a week and a half ago is going to give them sort of fuel to, I think, continue postponing any kind of a rate hike.
And then finally, we have midterm elections, obviously in November. I guess it remains to be seen how that's going to play out. But potentially, historically, that has been market moving. Remember, whatever team you're on, markets like actually lame duck presidents the most because nothing gets done, and markets really seem to like that. And so, I'm not wishing for that. I'm just saying, historically, that's how markets have reacted to if we do have the supposed blue wave that everybody on one side of the party seems to be thinking is going to happen. I'm not sure that's going to happen, but I guess time will tell. It's the only, I bring it up because it could be a potentially market moving event this fall. So as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or Josh or Tyler at northwestquadrantwealth.com. We'll see you back here in a couple weeks.